Good morning, everyone, and welcome to Marketing Matters. I'm Sarah Touchstone, Landmark Titles, social media marketing strategist and educator. Get the pleasure of bringing you Marketing Matters every Wednesday morning at 10 a.m., 9 a.m. right now if you're in one of our Nevada offices. That's right. We're not only here in Arizona, but we are also in Nevada. And I'm joined today by Dr. Mike Searcy. Dr. Mike Searcy, he does a variety of things, but today we're just going to focus on the real estate things he does, which is also a variety of things within the real estate industry. He actually does mortgages as well as real estate. So he's got brokeringloans.com, which is kind of there on the platform of today, but he also is a team lead. If you guys were on our 100th episode, you may recognize him because he was joined by the rest of his Snowbird Nation team. So he's a leader in the mortgage industry as well as the real estate industry. So when I was looking at bringing somebody on to really get into how we can get these buyers off the fence, I could not think of anyone better than Mike to bring on. So Mike, I believe you are a co-host. You can share your screen, and Mike has a really good, he sent me the presentation earlier. It's really a great presentation and I'm looking forward to it. So if you guys are struggling with your buyers right now, tune in and listen closely.
Okay, well, thanks everybody. I'm excited to be here again. I will go ahead and tell you that I planned a little bit differently this time than I did last time, because this is my second appearance in the 102 episodes. And for a short while, I don't know if it's been surpassed as now, but for a short while, the last video we did was the most popular viewed video that you had on your channel for a while, and that was one on how to get contracts accepted in a seller's market. And I say and I point that out only because we are in the pendulum swing at this point, where the pendulum has gone all the way over to the other side, and we are in a buyer's market, but we are in such a time where we do have some hesitancy with buyers at this time. So we want to talk a little bit about what does that mean. Now, mind you, I am a real estate team lead and I'm a mortgage team lead. And we've done, over the last few years, hundreds of deals. And that is not an exaggeration, with our team and the ones that I've been involved in. And I do a lot of the negotiation with our buyers, our sellers, and strategy sessions with our agents. We want to talk today about getting buyers off the fence. And I will tell you that one of the things we need to first start doing is having a conversation. Buyers need to know that, especially if they're renters, how much of their rent is going toward their equity. Now think about that for a moment, because people think they're sitting pretty. I'm paying rent. I'm not, I don't have to watch appreciation on interest rates rise. Why? You're already at 100% appreciation on the interest rates. It can't go any higher. None of that equity is yours. Now, we want to be careful, of course, not to send them away. But when we start thinking about, when people ask, should I buy? Is now the right time to buy? As a real estate agent, as a mortgage person, the answer, of course, is always yes. Now is the right time to buy. Chinese proverb, right? You've heard this. This is nothing new for most of you, but it's a great reminder. The best time to plant a tree was 20 years ago. The second best time is today. Appreciation. Everyone says the market's going to crash. All right. Best I can tell you from all of our knowledge and all the sources that I pay attention to, the naysayers are just that, naysayers. Let me go ahead and put out there that it is our opinion, because that's what all these things are. I cannot predict the future, but it is our opinion that what's actually slowing down is the rate of appreciation of property values. They're not going in reverse. We are not expecting a crash like we had previously in years past that everyone's going, I'm just waiting for the market to crash. I don't believe it's going to happen. I'm here to tell you that right now, emphatically, it's not going to happen. Now, you can disagree with me, and that's okay, but you will disagree with me at your own peril, because when you tell buyers a market's going to crash, they're not going to buy. Now, so A, I don't believe it's going to crash, and B, if you have that opinion, your opinion is you don't want to continue your business for the next year. And think about that very hard, because as Sarah said in the introduction, between last year and this year, if nothing changes, nothing changes. So we want to be very careful with that. So when people ask, when is the best time to buy? The best time is now. So what is this whole thing about rates? Rates are so high. Folks, rates are cyclical. I don't care if rates are 20%, not that they are, but at least at this point. But you know what? Even at 20%, it's a good time to buy, because rates are cyclical. You know, Matt Ishbia with United Wholesale Mortgage, the largest mortgage wholesaler in the country, coined the phrase, and a lot of other mortgage people have tried to pretend it was theirs. You know, we date the rate and marry the house. Well, that's great. What does that mean? It means rates are cyclical. Historically, they've risen. Historically, they've fallen, and they are attributable to a number of factors. And there are many opinions that people have as to what affects them. And it's amazing to hear what those opinions are. And when it's an actual fact, it doesn't matter. Rates are cyclical. They're going to rise and they're going to fall. The trap you can get into as a real estate agent is engagement in the conversation. Acknowledge that rates are cyclical and move on, because otherwise you get caught in that trap of, I'm going to wait until. Well, what typically happens is that people are waiting until interest rates go up, prices go down. I'm paying the same amount often when I do the math. Interest rates go down, prices go up. I'm paying the same amount per month. When the house prices are down, you jump. When price houses are not appreciating as fast as they have been in the past, like a seller's market, it is the best time to jump, because we have projects and plans to do that, right? Rates are cyclical. They're going to go down. What is the actual time that the average person keeps a mortgage? Some of you are thinking 30 years because it's a 30-year fixed mortgage. Some of you are thinking, well, I've heard this average of 7 years is 3. If the average person keeps a mortgage for 3 years, what are they doing? They're watching the rate. When the rate gets better, that it makes sense for them to refinance, they do. When the appreciation goes up and they have the opportunity to get rid of mortgage insurance, they do. So we're talking about 3 years. So we're in a buyer's market. What does that mean? It means the reverse of a seller's market, right? In a seller's market, we were talking about what can I get out of the buyers and how do I go about doing it? We're now flipping the conversation. What can I get out of the sellers and how do I go about doing it? You know, in a seller's market, buyers were even asking for things like, at least some of my team were, pizzas to be delivered on the day that the sellers were moving out. So that they can take care of the pizza and the refreshments to help with the move, just as a perk to pick mine. Well, now we're in the reverse situation. So what can we ask for? What are seller concessions? A lot of us know, depending upon when our real estate license was born, and if our license was born in the last couple of years, we've only known a seller's market. So what are sellers concessions and how do we get them? Home repairs. The inspection period, pardon me, the inspection period now becomes so much more important, because what the inspection reveals, if there are things that are unacceptable to the buyer, now we can go and ask for them a whole lot easier, because listing agents don't have a stack of other offers. What happens when I ask for, in a seller's market, and I'm a buyer's agent and I ask for repairs? I have to give the inspections the inspection reports that have to come with it contractually in the state of Arizona. Specifically, lines, I think one of my agents reminded me today, 212 to 214 in the real estate purchase contract in Arizona specifically says we're giving the inspection reports to the listing agent. So as the listing agent, now I've got them. I'm going to take those inspection reports. What am I really going to do with them? I'm going to pass them on to the other buyer agents waiting in the wings and say, hey, are you going to waive these? Here's the inspections. Oh, you are? Great. Then stay tuned. Then I'm going to go ahead and I'm going to basically refuse to repair anything on the inspection repair request list for the Binzer, as we know it in Arizona, and then send it back. If they don't want to move on, I've got somebody else waiting in the wings. Buyers markets, completely the opposite side. Now buyers can ask and expect because they don't have backups. So home repairs, don't put them on a purchase agreement though. Don't put them on an addendum that goes to the lender. And the reason I say that openly and out there is if I see them on an agreement as the lender, I've got to submit that to the underwriter. And now you've just added a condition to the whole loan that someone's got to verify. And they usually pick the appraiser, which means more money to the appraiser, to go out and double check that those things were done. So put it on a separate addendum outside of what's handed to your underwriters. The least we give to underwriters, the better. And then, of course, we can ask for buy downs. And buy downs are where right now, if we're getting a 3-year mortgage, a mortgage that we're likely to actually refinance in 3 years, get the sellers to buy down the rate. And here's what we're talking about with that. First off, and I'll talk about that here in a moment. Oh, look, here is the summary cheat sheet. I have this, by the way, for anybody who sends Sarah a specific request for this cheat sheet. I can give you a copy of this cheat sheet. So seller concessions and interested party contributions. Give this, carry this, hang on to this, use this as a tool and a reference sheet, because this is a really good guideline. People say, what are seller concessions? How much can I ask for? I'm going to ask for it and just keep going and asking and asking. And then you wind up getting caught later going, the lender saying, I can't give you that. We can't use that. You got to give that back to the seller. And you've just now negotiated all of this, this price, but this much concession, but you can't use it. So it goes back to the seller. And now you're getting less of a concession, which means the buyers are paying more. So primary or secondary home, think of it this way. If I'm putting 10% down, I can ask for up to 3% from the seller or an interested party. Gifts, things like this, or realtor concessions if we get caught having to do that. But we do that happily, don't we, when we're doing it for relatives, for example. At least, some of us do. Some of us don't, and that's okay too. But that's where that would go in. If I'm giving 10 to 25% down, the seller can actually contribute up to 6% in concessions. If we're doing 25% down, the seller can give up to 9% concessions. When would that realistically happen? A, in a buyer's market like now. B, when we got really good appraisal issues. C, when maybe the property is in an over 55 community and the buyers have substantial funds to put down, 25%, substantial funds to put down, pardon me. And C or D, whatever letter I'm on at this point, maybe the sellers don't need the money. Perhaps they passed on, it's probate property, and the sellers are heirs, and they're just like, yeah, whatever, just go ahead and do this, because 9% is an awful big chunk to ask for. So we rarely see that happen. If it's an investment property and a conventional loan, it's basically limited to 2% seller concessions. FHA, typically limited to 4% seller concession, as is VA. So, when we ask for concessions, what are our limits? There it is. Buyer, if we look at buyers and say, look, you don't necessarily need as much money for the down payment and closing costs, because in this market, we can actually nudge the sellers a little bit. And if we're going to play the nudge game, you might keep this as a general rule, as a general guideline specifically for that purpose as we go. So hints, and this is where I was going to talk a little bit about that buy down we just talked about. Builder credits, if we're talking about a new build, Builder credits are considered interested party contributions. So they go into those percentages we just talked about, like gift letters from relatives and the like. A 3-2-1, a 2-1, and a 1-1 buy downs are either seller contribution or purchaser contribution, depending upon the bank, the company, etc. What does this mean? Let's get a 3-2-1, 2-1, and a 1-1. I know a lot of you know, some of you who may be new to real estate might not know. So let's do a quick notation here. Let's give an example. The example is 7%. I've been offered a mortgage at 7%. A 3-2-1 means for the first year, I'm going to take 7 minus 3. And now I'm going to be at 4% for year 1. I'm going to be at 5%, 7 minus 2 for year 2. I'm going to be at 6% for year 3. 7 minus 1 is 6. And then it goes up to 7% for the balance and duration of that loan, the amortization schedule. But what we've done and how we word this so that people actually think if the average is 3 years, what we're really looking at is you've got to qualify for the 7%, but it's going to be 4%, 5%, then 6%, then refinance year, or we finance in year, the third year or the fourth year. But whatever it might be, I'm buying it down and watching the rate, buying it down and watching the rate. But if the seller buys it down now, and look at it this way, the 3%, 2%, 1%, they're equivalent to that percent of the loan amount. So it's a lot of times we as realtors want to actually think, it's percentage of the sales price. Great. But it's really it's the equivalent of the loan amount. So it's not as big of a hit to the seller as we might think. And it sometimes helps convince them to move forward and nudge them a little bit. Work with your lender to figure out exactly what the number ought to be, might be, etc. The 2-1 is the same. The first year, it's 2 percentage points down, temporary buy down. The second year, it's 1%. And then the third year, it's the regular percentage they were offered for that loan all the way through. A 1-1. So let's say it's a 7%. The first year, it's 6%. The second year, it's 6%. So it's a 1-1. So each year, it's 1 point down. So we look at that way. And you think about it in terms of, if the seller's going to help me make my mortgage payments for the first 2 or 3 years, does that make it easier on my cash flow? Because I got some repairs I want to do on that house. I've got some updates, some changes, some things I want to do. So they can be either, buy downs can be either seller contribution or purchaser contribution. Most of the banks and wholesalers for mortgages, they will not let you combine those. But often the purchaser contribution is more costly. So flip it if you're able, because what that's going to do is, what do I mean by flip it if you're able? We just did this right now in the middle of a transaction, in the middle of escrow right now, where the seller actually agreed to a price from the buyer. The buyer talked to their lender. They said, you know what, we'd rather have a 3-2-1 buy down. So what they did was they put an addendum together, raised the price of the property, and then gave that money back to the buyer as a concession with an equal net to the seller. So that was easy for them to figure out. All right, so those are my hints for the day as far as that goes. Applications for our new generations. It's normal, it's typical. 30-day pay stubs, W-2 forms from the last 2 years, tax returns, bank statements, business tax returns, and profit and loss statements if self-employed. That's easier than it sounds for the people that maybe are self-employed and haven't got profit and loss statements. It's actually pretty easy, and we can walk people through that easy, even as realtors, because it's a simple, do an Excel spreadsheet for the last year, go through your credit card or whatever you're using, put in what you've put in what you've gained, and do a profit and loss specifically. But I am going to say this, if they're doing online applications these days, the online applications like mine, we're going to ask specifically for state ID or driver's license copies, as well as social security card copies, because we want to have proof of identity so that when you give me all this other stuff, it's not somebody trying to obviously play the game of identity theft and apply for a mortgage. So keep in mind that proof of identity if we're doing a complete online application process. All right, so ladder rungs. We talk about this with our real estate agents. We talk about this with our mortgage loan officers. The 4 steps to every ladder when we're dealing with buyers, they got to like you. If they don't like you, they're not going to buy from you. They got to, and once they like you, you got to constantly build rapport, because building rapport will get you to trust. They will buy a house from you or borrow from you if you can get to the point of trust. They'll wait for you because they can trust a lot of people, but they'll wait for you if you got their loyalty. Use your real estate team lead or your broker. Specifically, make sure that your broker knows any play that you're making with the buyer. Look, Mr. and Mrs. Buyer, I can't show you, more than 3 houses unless I have that pre-qualification, that pre-approval letter, whatever whatever we specifically want. So I need you to do that. My team lead, my broker won't allow me to do that in that respect. As the team lead for the real estate team, I tell every one of my agents, whatever your play is, make sure I know it so I can back you, because we are specifically into not wasting our time. And we know we're wasting our time with buyers who are not qualified. So let's make sure they are. So things like that. I can't show you more. I appreciate you want to see that many houses. I can only show you 3 houses, and then I absolutely need. Why am I showing you 3 houses? From a real estate team leader's perspective, that's a job interview. I want to build rapport. I want to get them to like me. I want to start working on that trust. And then an enemy of my enemy is my friend. I understand. I'd be showing you houses all the time. It's my team lead. It's my broker, whoever it might be, right? And I'll play the bad guy for our team any day of the week because it gets us paid. You can fill your pocketbook. You can fill your ego. You don't always get to fill both. Support and education. By the same token, make sure you have a relationship with your lender and with your team lead or your broker where they're going to make you look like a rock star. Everything they do is to support you, period. We've got over 50 wholesale lenders to match the right money source to the right scenario. My NMLS number officially, since this is an official lender presentation, is 2050165. And I am here, Sarah, now to answer any potential questions. This time, I actually kept you under that half-hour mark that you asked for.
Awesome, Mike. Great job. Does anybody have any questions for Mike? I know that was a lot of information, and people are probably going to go back and be like, okay, I got to watch this again. I got to figure out what I want to implement from this type of presentation. Well, if you guys have any questions, let us know. I think I've only got one other class coming up. There are no webinars the next 2 weeks also. So if you guys have any questions, put it up there. Let us know. Chat window or question and answer. We are done. We're done with webinars for the remainder of 2022, but tune back in 2023. We're going to be kicking off that first week in January with Marketing Matters, and then of course Market Insight. So guys, have a good Christmas, and then come back, be ready to work. There is a question, Mike. Any tips on negotiating price within the sellers?
Tips on negotiating the price with the sellers. It's interesting to recognize that sellers are still often in the mindset of 20 months ago. They're often still thinking that, well, it's a seller's market. My house is worth this. It was worth this, when somebody else wanted to buy it then. Remember, of course, that, and we tell all of our sellers this when we have our listing meetings, the market will speak. The market will speak. If you're, and I tell my sellers all the time, legally, you can list the house anywhere you want to. My first listing that I ever had in Arizona was $1.3 million. And it was worth every bit of $825,000. I took it because it was my first listing and I wanted my sign out. But the fact is, and we have to tell them right up front, look, the market's going to speak. If we're not getting any activity within the first 10 days, we are wrong. And so oftentimes I want more than one source. There's more than one artificial intelligence database plus our own that we can check to see what is the best potential price on the house. And no, I'm not talking Zestimates. Please stay away from Zestimates. But RPR is one of those sources. RPR is one of those sources. We have access on the lending side. We have access to a couple of others as well. And so find a couple of different artificial intelligence sources that come from some of the best databases. Appraisers are also looking at some of those artificial intelligence databases. And so we can actually do that too, and kind of access some of those same databases. So I always go in with, here's the range. Now, I can give you every range I want, but what is a property truly worth? Remember from your real estate class, right? Market price, appraisal number. What number actually matters? The number that a buyer is willing to pay for it. And as I say to someone, if you turn down that because they were $1,000 lower than your minimum, you just bought that house back for $1,000. Congratulations. So it's often difficult, but at the same time, when I have those conversations, I will say, look, here's what I suggest. Let's go ahead and fill out a couple of pre-dated. You got to do this in writing and by pen if you're going to predate anything, because you can't predate a transaction desk or DocuSign, et cetera. But let's do a couple of pre-dated addendums that drop the price, at regular intervals till we get to this number, and let's see what happens. And then I'll give you a quick call and let you know we're going to go ahead and pull the trigger on that one as we go. So information is your best tool. Absolutely your best tool. Make sure you've got good analysis and you bring information with you that kind of shows you've done your due diligence and you've done your homework. And no matter what your neighbor says the house is worth, here's what the numbers show. And here's what's likely to happen when we get a lender asking about an appraisal.
Yep. Mecky, speaking of appraisals, we've got a question. What's happening with appraisals? What are they being more price cautious, expecting a correction that may or not really happen?
Over the last 120 deals that we've done as a team, I have just completely seen random approaches to appraisals. And I do have to say that I am a little bit confused because sometimes I look at it and go, that's way off. Are they thinking that they're the guardians at the gate trying to hold back, rampant appreciation? And at the same time, are they trying to stem? Do they think they're the arm that's going to stem the crash that I don't believe is coming? I don't know, but we've had the same property appraised 3 times by 3 different appraisers and come up with 3 different numbers. My opinion has always been that the contract we have in hand, I don't often tell buyers and sellers this, but I will say, the contract that we have in hand is the house that you're looking at right now. That contract is the best comp you have. It's the same house. This is what someone's willing to pay. So that's the best you have. However, you're going to find that appraisals are kind of all over the map right now. And I think that appraisers don't have a unified strategy.
Now tell us what you really think about appraisers, Mike. So we did have an appraiser come on our Arizona Real Estate Series panel last week, and they said that changes are coming very slowly, if at all. Like usually it takes a full quarter or longer for their appraisals to kind of match up with the comps and everything that are going on. So I don't know if he sounded more cautious or price cautious, but he said that there is a slow adjustment. But like I said, it takes them about 3 or 4 months to really start making those adjustments. So I think come 2023, we may start seeing more adjustments than we did in the latter half of 2022. So,
Very good.
all right, guys. Well, I guess we will wrap it up then.
Last comment.
Oh, yeah.
Only if you want that cheat sheet, please reach out to Sarah and I will go ahead and send it to her so she can disseminate it to anybody who
Yes,
like it.
absolutely. If you guys need anything, I'm going to put my contact information in the chat. Mike, could you put your contact information in there as well?
Sure.
All right, guys. So we've only got one class left of the year. We know that everybody kind of around the holidays takes a little bit of time. Real estate is typically pretty slow during the holidays. So you guys enjoy. But before you enjoy, on December 16th, from 9 to 10 a.m., there's a social media workshop. And if you'd like to attend this, you guys know, a huge fan of social media. If you guys haven't been using social media, this one is with Agents Unidos. I probably said that wrong because it's Spanish social media content. So even if you know just a little bit of Spanish, you may want to create some content, or if you've got somebody that speaks Spanish on your team, it's a great idea to join in that. And that's about it, guys. We're wrapped up for the year. I hope everybody had a wonderful 2022 with us. Like I said, for us, it was a big year. We had our 100th episode of Marketing Matters. It's been a pleasure bringing you guys great content on Marketing Matters for over 100 episodes. And if you see anything on Marketing Matters that you want to implement in your business, I cannot encourage you strongly enough to reach out to one of our business development managers. I'm going to be going through, we have over 500 people registered for Marketing Matters. So one of the things I'm going to be doing in 2023, excuse me, is going through that list and making sure you guys are paired up with a business development manager that can help you, whether it's Beth, Becky, Melinda, Mary, Patty, Michelle and Prescott, Michael, Tom, or Renee. We really are here to be your partners in your business. We have 7 offices across the valley, as one in Prescott and 2 in Nevada. So we're in a couple of states, and we're here to help you with all of your title and escrow needs as well. I have a feeling, I know that all the predictors are saying that 2023 is going to be a lean year, but not for agents that work with Landmark Title. You guys are going to thrive in 2023, and we're going to make sure. And then, of course, thank you to our partners. We may only be in Arizona and Nevada, but we have nationwide partners out there, such as Homestead Title, Capital Title, and U.S. Title. We're very glad to be part of something bigger than ourselves. You guys having a wonderful Christmas. Have a happy new year. We'll see you right back here in 2023. Thanks, Mike.